He lost $200 million after SpaceX's valuation plunged 40%. The mistake that sealed his fate nobody saw coming. That loss wasn't just a headline. It wiped out the retirement savings of dozens of employees, left early-stage investors with empty wallets, and sent shockwaves through every fund that thought private rockets were a guaranteed win. If you're watching the market for the next moonshot, this story shows why hype can become a financial black hole. So how did a company that seemed untouchable turn a massive windfall into a negative balance sheet for an investor? The meteoric rise in early 2022, SpaceX was valued at a record $137 billion after a fresh Series N round. The company had just completed its 100th successful Falcon 9 launch, and the Starlink constellation was delivering internet to remote corners of the globe. Investors rushed in, convinced the private rocket maker would soon go public at an astronomical price. One Reddit user, who we'll call Alex, decided to double down. He allocated $200 million from his tech startup exit into a secondary market purchase of SpaceX preferred shares at $125 billion valuation. Warning signs ignored but not everyone was cheering. Analysts noted 3 red flags: a mounting debt load of $6 billion, a cash burn rate of $1 billion per quarter, and an increasingly aggressive launch schedule that left little room for error. Alex brushed them off, saying, "SpaceX can't fail, they've proven it with every launch." He even posted on a forum, "If SpaceX goes public, I'll be set for life." The community's optimism was a perfect echo chamber. The turning point in late 2023. SpaceX announced a delayed Starship orbital test, citing unexpected technical challenges. The delay cost the company an estimated $300 million in development spend and triggered a wave of speculation about the feasibility of the Mars colonization timeline. At the same time, the broader tech market entered a correction, dragging down valuations of high-growth private firms. SpaceX's next funding round, in January 2024, priced the company at $100 billion, a 27% drop from Alex's entry point. But it gets worse. The collapse. By mid-2024, secondary market data showed SpaceX preferred shares trading at a 40% discount to the latest private round. Alex's $200 million investment was now worth roughly $120 million on paper. He tried to sell, but liquidity in the private market was thin, buyers were scarce, and any offer came at a steep discount. In August, SpaceX announced a $1 billion loss on Starlink hardware, further eroding confidence. Within weeks, the price fell another 15%, pushing Alex's stake below $100 million. The final blow came in November 2024, when a Starship test flight exploded on the pad, prompting a $500 million write-off for the company's launch insurance. The aftermath. Alex's portfolio turned negative after accounting for the accrued interest on the margin loan he used to fund the purchase. He publicly posted, "SpaceX made me negative," sparking a flood of similar stories from other retail investors who had dabbled in private equity via secondary platforms. Several funds that had co-invested with Alex filed lawsuits alleging misrepresentation of SpaceX's financial health. Meanwhile, SpaceX continued to launch satellites, but the dream of an IPO was postponed indefinitely, leaving the private market participants with a lingering question: when will they ever see a return? So what can we take away from Alex's collapse? Lesson 1. Never ignore fundamentals for hype. Even a company that lands rockets daily can suffer from unsustainable cash burn and debt. Check the balance sheet before you chase the headline. Lesson 2. Liquidity matters more than valuation. A high-price private round means nothing if you can't sell your shares when the market turns. Always assess the secondary market depth. Lesson 3. Diversify beyond a single moonshot. Allocating a massive chunk of your net worth to one speculative asset is a recipe for ruin. Spread risk across sectors and stages. The people involved didn't set out to fail. They believed in a vision that seemed larger than life. The difference between them and you is awareness, and that's exactly why you're here. If today's story made you rethink how you allocate funds to high-risk ventures, consider a platform that gives you real-time risk metrics and low-cost diversification. Webull offers commission-free trades and advanced analytics that can help you spot red flags before they become headlines. Sign up through the link below and get 90 days of free premium data. And if you want more breakdowns like this one, the stories behind the biggest financial disasters in history, hit subscribe. We publish a new deep dive every week, and you won't want to miss the next one. Criminal or just reckless? Tell me below. Save this so you don't forget it.